5700 holds the key, but I am not chasing. Now, there was a time where I would sit and stare at every tick, reacted to every move, stressed over every little price fluctuation, and it's exhausting, and more importantly, it's unnecessary. Today, I check the charts a few times a day, usually in the morning and last thing at night, and maybe once or twice through the day. There's no alerts set, I'm not checking phone for alerts, I'm not reacting to every wiggle, there's no stress, and it keeps my blood pressure low and my profits high. And that's an ironic twist the way that it works. So anyway, let's look at the charts and explore that a bit further. Now then, one of the things that we saw yesterday is that 5700 level popped late on in the day. Now, what I was trying to describe a moment ago, I'm not sitting, waiting, poised with my finger over the confirm and send button. It's like, yeah, I mean, price got there, and as I was checking it in the last hour, it sold off again. So by the time I looked at it, it'd gone through my trigger and reacted off it. So okay, no harm, no foul. So just not being in a rush to do anything has been one of the biggest money savers and stress relievers in my trading career. So set your alerts, set your trigger levels, but don't bother setting alerts. You're just going to be waiting on bated breath for that level to be penetrated, whether you're at the desk or not. So just check in a couple of times a day for your, has it gone through that level? If price is above that level, as I'm looking at it, then place the trade. If it's below it still, which it is, then don't place the trade. I'm not chasing the move. So ultimately, we're still in this no man's land here between the two, the bullish and the bearish triggers. I currently remain bearish, and I've got that bearish inclination for the moment. The daily charts is suggesting that bear breakout could come good. If we get below 5600, then that could be a nice early indication to the big bear down move that we were anticipating. ADD is confirming that we are overextend on the bull side. Overextend on the bull side, and we could see some bearish movements as we open the market. Now, as we come into the opening bell, again, we've got a couple of hours to go still, but as I'm looking at this, the overnight futures, they are down around 45, 50 points, so we should be seeing that bear move continue. So, maybe gap down to yesterday's lows, back inside that range, and push down to that prior range. That'll be an ideal scenario for me. Again, the bear swings are already in place and intact, so I'm just waiting to see if that scenario continues to unfold for me, or if I have to ultimately unwind my bear positions and start digging into my bull pockets and start loading up on that side. So over under 5700, under about 5635 we said, and again, we'll be bullish or bearish around those levels. So don't sit at the chart all day. Just carry on doing what you're doing. Wait for your triggers, wait for your entry points, wait for your entry conditions, and go and enjoy yourself. So here's a fun stock market fact. Did you know in 1958, legendary trader Richard Donchian, hopefully I'm pronouncing that right, introduced a 4-week rule. If price breaks out after 4 weeks of sideways action, it often triggers a massive move. Now, the great setups here, they don't happen every day, the big trending moves that is, but when they do, you better be ready. And this is why I like to have scenarios and run bullish scenario, bearish scenario, sideways scenario. So again, I'm always prepared for whatever the markets may throw at me. And if you like the sound of that and want to find opportunities without staring at the charts all day, then click the link next to this video and you'll be taken to a free training where I outline one of my favorite money making patterns. And if you click the link, I will see you over there.